Commercial financing includes the following options.
Traditional bank loans.
Banks may tighten their lending criteria. Loans may still be available to businesses with a solid financial history. To qualify for one of these loans, a business needs
A strong business plan highlighting stability and addressing what will be done during tough times.
valuable collateral sufficient to secure the funding requested.
A strong credit score and solid financial history demonstrate an ability to repay.
Alternative lenders and online lending platforms.
When traditional capital sources tighten funding requirements, online lenders and alternative finance companies often offer more accessible options, including
Online platforms allow individuals or businesses to borrow from multiple private lenders.
businesses can use their accounts receivables as an asset with a factoring company for immediate cash.
Merchant cash advances are for businesses with steady credit card sales and provides upfront capital in exchange for a percentage of daily sales.
Bootstrapping and self-funding.
Personal savings, assets, or revenue reinvestment can be critical, but is not always ideal. Consider
Streamline operations to maximize profitability, allowing business reinvestment.
Consider liquidating assets that are not critical to your business or personal life to raise funds.
Cutting expenses and increasing cash flow.
Improving cash flow can sometimes provide the financial cushion needed to keep going. This can be accomplished by
Work with vendors or creditors to extend payment terms or reduce costs.
shift your business model or services to cater to current consumer needs, such as offering online services, essential goods, or resilient industries.
Partnerships or strategic alliances.
Form partnerships or alliances with other businesses. Share resources, marketing, or even pooling capital can help both parties weather challenges. This includes
Pooling resources with a complementary business to reduce costs or share risks.
businesses may be open to bartering products or services instead of funding or other support.
Federal Reserve and central bank programs.
Central banks like the Federal Reserve in the U.S. may introduce liquidity measures to make it easier for businesses to access credit. These measures include
Lower interest rates can make borrowing more affordable, particularly for businesses looking to expand or refinance.
These programs are aimed at stabilizing financial markets and ensuring businesses have access to capital.
Venture capital or private equity.
These firms may become more selective, but they may still be willing to fund promising startups that are in a growth industry. The factors considered include
Demonstrate stability by showing how your business can be successful even during tough economic times.
Utilize a recession-proof business model by focusing on offering products or services that are in demand even during a downturn.
Angel investors.
Wealthy individuals provide early-stage capital and may invest, especially if they believe in your potential or if they are looking for deals, to find angels.
Network by attending events or pitch competitions to connect.
Leverage industry experience by demonstrating expertise and a path to business success.
Crowdfunding.
Platforms that enable private individuals to invest in businesses can be viable ways to raise money, especially for creative projects, startups, or community-based initiatives. Types of crowdfunding.
A product that creates an innovative service or something people need can appeal to the public for support.
Offering equity in your company may enable you to access funding from individual investors.
Friends and family.
Borrowing from friends and family is always a sensitive issue, but can be a potential source of funds. There are risks to these relationships and personal finances, so proceed with caution, such as
Set clear repayment terms or consider a formal agreement to avoid misunderstandings.
use smaller loans with shorter terms that will be sufficient to get you through short-term challenges.
Government grants and programs.
Governments may have loans, programs, and grants to support businesses and individuals during economic downturns. These can include
The Small Business Administration (SBA) often provides low-interest loans to businesses.
Governments may offer temporary relief programs, which could include deferred tax payments, emergency relief funds, or direct grants.
Some specific industry sectors may receive targeted support. Business funding provides the financial resources needed to grow, operate, purchase, or expand.
If you are in need of business funding, contact Want Capital now for all your commercial financing needs.